everyone, I'm Gloria S. Crump, the Queen of Real Estate here at the Coastal Leaders Realty Group, and today for our Tea Crumpets, we have Potter Moss with Cadence Bank.
You got it.
Yes, thank you for joining us. I really appreciate it. And so tell us a little bit about, your position, the title and history.
Okay, I've been here at...
He actually took our note. We're very impressed with him. So
I've been here at Cadence Bank for 7 years. I just do residential mortgage loans.
Okay.
When I originally came to work here, it was Bank or South Bank, and then we merged with Cadence a few years ago. So been here for 7 years. So.
That's awesome. Now you not only lend over here in Baldwin County, but you also Mobile County.
Yeah, anywhere Mississippi.
Really?
Yeah,
Okay.
done them in
I
North
got a
Carolina,
ton of clients in
Tennessee.
Mississippi. Yeah, Southeast.
Indiana. I've done them in Indiana.
Oh wow.
Yeah.
Well, that's good.
All over the place.
Because obviously I sell to people from all over that purchase here, so that's really good to know because they can use you at their own home
there
in
you
a whole
go.
other state. So
There you
that's
go.
great. So obviously, your residential mortgage lenders.
Residential.
So is what types of properties? Because obviously there's a lot of people reside in different types of properties. So which ones do you finance based on?
Like you said, strictly residential.
Mm-hmm.
Get out of the way. No mobile homes or manufactured homes.
Okay.
Can't do those. Get that question all the time. Cannot do that.
Because the one thing down here, you can come across a mobile home that's $400,000.
Yeah.
So
Can't do it.
yeah, and it's hard because people want the property.
And it may make sense, but
it does.
you can't do it.
Yeah.
Regarding condos, we can do non-warrantable condos on our portfolio products through the bank
That's great.
for second home and primary residence, and no investment property on condos.
No
But
investment.
but do investment properties on residential
homes.
yeah, single family
residences. Yeah.
All right.
Awesome. Now we're going to talk about one particular loan product y'all offer, but what are some other types of loan products y'all offer that make y'all stand out?
Of course, we do conventional conforming FHA, VA, and USDA rural housing loans. We have some portfolio products through the bank, including 100% loan to value medical professional loan for doctors, which is, and you can do that. I don't think the loan to value is 100% on a second home, but we can do second homes with that.
Even with that?
Mhm.
Oh, okay.
For a doctor.
Yeah.
We got products
Now,
like...
is it just, it's medical doctor, not a PhD?
Not a PhD, medical doctor.
Yep. Okay.
Mm-hmm. Products that allow for non-warrantable condos. I just said something about that.
Yep.
Of course, we're getting ready to talk about the in-house 30-year fixed rate conventional loan with $500 down.
Yes.
Primary residence only. And then recently gotten kind of into the one-time closed construction loans and renovation loans we do in-house. It's pretty good. I like that product.
Okay, tell me a little bit about that, because I do have a lot of people that, purchasing homes, they want to make it their own, so give us a little example on the reconstruction of the building.
Just a quick, it's a conventional loan only, not FHA, anything like that. You can go to 90% loan to value.
Okay, so
that everything be based on the appraised value as completed.
As completed.
As completed, yeah. As completed.
Okay.
It offers a long-term rate lock with a float down option, meaning you got a year, you lock it in, and then at the end of the year you have to convert to a permanent product.
Okay, gotcha.
So this is a short-term loan. It's a 12-month loan, whether it be renovation or construction.
Okay.
You got 12 months. You're locked in.
Mm-hmm.
So your rate's not going to go any higher long term, but you can float down to a lower rate if the market gets better at the end of the 12-month period.
Okay, now let's just say it does get better. Is there a cap on the float down?
In meaning?
Let's say, I'm just going to throw out a number. You lock in at 7%. Let's just say miraculously it goes to 5%. Is there a cap where they go, okay, no, you can't float down all the way to the 5? It is the current market.
It is the current market.
Okay.
Now, mind you, when we locked your loan, we were basing it on the 60-day rate lock at the time.
Okay.
And we gave you that for a year. So you have to go back to the 60-day rate lock, which may be an eighth higher than the market on the interest rate than a 30-day rate lock.
Gotcha.
But it's still a substantial difference.
Gotcha. Okay. Just making sure, because you know sometimes they'll say, "Oh, but you can float down." It's like, "Oh, but you can't float all the way down."
Oh, you can damn near float all the way down.
All right, good. Well, that's good to know. Just so that way, it's like no surprises. Now, let's just say, well, I guess it wouldn't matter because if somebody's debt to income might change, they don't go back and start looking at anything of that nature.
Not unless you change products. Or you modify and try to get more money or change something on your house.
Gotcha. Okay.
Everything remains the same, then everything remains the same.
Okay. And so, okay, well, that's good to know.
Yep.
Okay. Yeah, I like that. So tell us about, is there anything else before we get into the good stuff?
Oh, that was a 680 credit score on that renovation loan.
Oh, that's good to know. Okay. I love it. All right. So tell us about the 500 down payment program.
Okay. Well, it is a very popular product at the bank.
I bet it is.
And we always try to go there first on your low down payment type loans that we need.
And this is an in-house
It is an in-house loan.
Only can get it at Cadence Bank.
Only get this one at Cadence.
Not Candace.
Not Candace.
But Cadence.
There's probably a Cadence Bank somewhere, but we're not Candace. We're Cadence.
Cadence.
It is a 30-year fixed rate loan with no PMI.
That's awesome.
So that's a good thing.
Because that can save, like we talked earlier, I mean, it varies, but it could even save you $1,000 a year, or even possibly more. So
$100 a month just
get thrown out. Yeah. That's huge for 100% loan.
It's not.
Because PMI, just if somebody's watching, PMI always takes, if you don't put 20% down.
That's right. And it's, and you get nothing from it other than you don't have to put 20% down. That's all you get from private mortgage insurance.
You save that, because a lot of times people go, I don't want PMI, so they'll put more down. Well, in this sense.
Well, you take a 660 credit score on a conventional loan and with PMI on a $250,000 house, and they rate that PMI based upon your credit scores. It may be $290 a month.
Oh, wow.
Right there, it doesn't matter if your rate's 6%. That PMI will eat your lunch.
Exactly.
And this is a way to counteract all that.
That's awesome.
So,
and low down payment. So
yep.
More money in your pocket.
And more money in that pocket.
Yes. All right.
Let's see what else.
I said $500 minimum borrower investment.
Oh, yep. It's a $500 minimum investment from the borrower. So I don't like to say down payment because there is no down payment required.
True.
You could have the $500 invested in the appraisal. As long as we show that money came out of your own pocket, that could be your investment.
Okay.
You got me?
Yes.
Okay.
So $500 minimum investment.
From the borrower.
And it could be the earnest money?
Could be the earnest money, could be the appraisal fee.
Okay.
Yep.
Just as long as $500 is invested into that property.
Documented as the borrower's own funds.
Okay. And now it can also, you can receive gifts from family too, but not the $500.
Not for the $500. So any reserves that were required, closing costs, if you want to put a little bit more money down than the $500, that can be a gift from a family member.
Yeah. Okay, well that's good to know, especially for the closing costs. So, and then you can even ask the seller to help contribute to the closing costs.
Correct.
Well.
And it's 6%, which is a big deal.
That is huge.
So y'all get a $300,000 house you're buying, that's $18,000. And you can use some of that to buy your rate a little bit down further because this product will allow a little bit of a rate buy down.
Oh, that's good to know. Yeah. Okay. And it's a 30-year fixed rate.
It is.
So that's
no gimmicks.
No gimmicks. I love it. No gimmicks, 30-year fix.
Yeah.
And it is a 640 minimum credit score.
That is correct.
All right. And now one thing with the DTI, which is the debt to income, ratio, that can fluctuate depending on your credit score. Is that correct?
That can. So if you have a 680 credit score, you can go to 45% debt to income ratio, which is pretty lenient. If you get a 640, they're going to bring it down a little bit to 40% unless you have some mitigating circumstances, which I have a list of those that I'm not going to go over right now, but I always try to look and see if you have that so I can know to put you at 43 or 40.
Gotcha.
But 680 is what really opens that product up.
Yeah. Well, and that's just good too because, like you say, you no PMI. And then the debt to income, I mean, that helps right there because y'all are looking at how much even like, with the debt to income ratio. So,
the having no PMI. Yeah, that helps alleviate, so it's not as big as you think it would be.
Exactly. And one thing we were talking about too, this is a great product for people who are coming out of college and such because the student loan debt.
Yeah. So used to be every loan program when I got to business 26 years ago, if your student loans were deferred for over 12 months from the note date, you didn't have to count them. Don't even worry about it.
Yeah.
Well, about 15 years ago, that all changed.
Yeah.
And it went to minimum calculation, no matter if you were deferred or not. This program still allows, if you're deferred student loans, not to have to count them, which can be a big deal.
Yes.
On qualifying for a loan.
Oh yeah, for that DTI.
Especially on first-time home buyer.
For sure. I mean, that's huge because a lot of people, as you know, like they're...
Kicks them out.
Oh yeah, because depending on how much their student loans are.
Yeah, you got $75,000 in student loans, you got to count 1% of that. That's $750 a month.
Exactly. I had on myself, so I definitely understand definitely understand how important that is to not have to count that because that could make or break the person being able to buy into this.
Absolutely.
Yes. And then, and so one other thing is, there's certain things like, y'all were comparing how good of a product this is because, like, for instance, unlike FHA or normal conventional loans, there are some minimum trade lines.
Yes. So,
restrictions.
So if I'm approving an FHA loan or a normal conventional loan, I'm not looking at your trade lines per se. I'm running it through an automated underwriting model. It approves it or it doesn't approve it, depending upon what I put in there.
Gotcha.
On this, while I will sometimes run it through automated underwriting and it can make a difference, it doesn't matter if you're great. If you don't have minimum trade lines, if I don't look at your credit report and say, you have two 24-month trade lines, two trade lines with a 24-month history, paid perfect in the last 24 months, sorry, everything else looks great. That's a bad thing about it. But I have some tricks up my sleeve for that if we need to.
And trade lines, just so you know, that's like car payments, credit cards, things like that.
And actually you can have alternate trade lines to do that. Well, your rent, where you've been paying rent.
Yeah.
We've done them with Spotify accounts.
Really?
Spotify accounts.
Oh my God.
Car insurance.
Yeah.
I mean, anything we can
that
prove
has
a payment history on.
Yeah.
We can do that. And actually you can do like 24 into 12s and look
That's
at
so funny
24s.
that app subscriptions can be considered a trade line.
We've done it.
That's new. That's news to me.
That's grabbing.
that is, but that's getting creative.
Yeah.
You pay new. Half the time people don't even know what subscriptions they're paying for, so that's good to know.
Yep.
Now, one thing about this, there are like income census tracts as well as locations.
Yeah, so you're depending on where you are.
Yes.
Where you are. So if there's a website, and I've given it to Gloria. This
we'll have it in the caption. So
you can go type in your address. You use 2024s, 2025s. Haven't come out yet. Type in the 2024 census tracts, and if it says tract income level low to moderate, there is no income restriction. You can make $500,000 a year,
and
as long as you don't own another piece of residential property
in your personal name.
In your personal name.
So if you own like an investment property and an LLC, it's not in your personal name.
Well, the question is, do you own it? No, you don't.
Because an LLC
does.
owns it. So, but it could show up, I guess, in your DTI if it have. Would it? I guess it depends on how it is.
It's how it's financed. If it shows on the credit report, and I haven't done one this way, but I believe that if you can show that property is in the name of an LLC.
Yeah, it's not in your name personally. Yeah. Okay. And so, and then one thing you were talking about too is that it's the borrowed income limit. Like, let's say it does qualify to be a limit on the income. It's strictly the borrower. That's not a household.
A lot of these programs, like you do a USDA loan, it's household income. Yes. There's a max household income. This one, it's not. it's qualifying income. So if you are over on qualifying on the income we tell you that it could be for this particular house, and you decide, we said, man, we could do this other type of loan, we really want to do that one, Potter, I can say, well, drop him off.
Yeah. He can be on the deed.
He can be on the deed, drop him off the loan, and let's just see if you qualify, wife.
Yeah.
And you're under the 45%. Oh, look, you are.
Yeah.
And then you could still do that loan program.
That's awesome.
Yeah.
That's good to know that it's not household, that it's strictly
So that opens it up a little bit. Yeah.
Yes, for sure. And so, but it is a great alternative to the USDA and the FHA.
Mm-hmm.
I mean, it really is an awesome loan program.
Yep.
So, well, good. Well, that's awesome. I think we pretty much touched all the high points on it.
I think we about hit it.
Yeah.
That's about everything I'd tell anybody, to be honest with you.
And then you just start getting all the figures and start running